This is the basic anatomy of a candle. If you're bullish, you have an open, a low, a high, and a close. If you want to take part in bullish moves, you have to buy below the opening of this particular candle to get the best risk reward. With a bearish candle, you have an open, a high, a low, and a close. And if you want to take part in bearish moves, you should be selling above the open of this candle. Price is fractal, which means these candles apply on every single time frame. If you wanted to be a part of this long bearish move here, you would need to find an opportunity somewhere inside the wick of this candle, because that is the high of that particular candle on this particular day. Now, because you know that you are above the open of this candle, all you need to do is go onto a smaller time frame and find confirmation of a market structure shift to the downside. You can use a fair value gap, you can use an order block, you can use whatever you want. But if you find areas and sell confirmations and you are above the open in a bearish day, you will be able to take part in successful sales on this particular day. You have to get in line with the bias of the daily candle to give yourself the best chance of succeeding in this market.
If there's one thing which is going to slow down your progress, it's overcomplicating the whole process. You need to ignore all of the idiots trying to show off with fancy terminologies. All you have to do is focus on finding a system which works for you, and focus on following a set of rules where you end up taking a trade, and as long as you're using good risk management, you will be fine. This is a range to the upside. We've got liquidity above this high. If I measure this entire range which was created, I can see there we're able to mark out our kill zone. There's also a nice area of buy side imbalance, as well as a lovely looking order block. I also like that candle because we swept under these lows right here, so this area's got quite a bit of potential. Now, it doesn't always play out the way you want it to, but as I mentioned, as long as you're using appropriate risk management, if you focus on finding high quality setups with a good set of rules, risk management will help you become consistently profitable, because you only need a 40 to 50% win rate to make consistent profits in the markets. And sometimes a little bit of perspective and just remembering that does go a long way. And it should also give you a peace of mind knowing that you don't need to overcomplicate the process. If you struggle with AMD, I'm going to tell you exactly where to look for it. But first, what is AMD? Accumulation, manipulation, and distribution. You've got three different cycles in price action which is likely to play out at certain parts of the day. The first stage is accumulation. That is just sideways movement. Once you identify accumulation, you can actually anticipate a manipulation is likely to happen, which is essentially taking out price action which was created in the accumulation phase. You then go on to distribution, where price action essentially rebalances into the manipulation that was caused in the previous cycle of price action. All you need to do on a 15-minute time frame, using a vertical line, highlights 11 p.m. UK time until 5 a.m. UK time. Find the low and the high. That is your accumulation range. That specifically is the Asian session. So you know now that accumulation is likely to form inside the Asian session. If you spot accumulation inside the Asian session, which is sideways movement, you will be able to then identify the likelihood of manipulation from the next cycle of price action, and then distribution from the manipulation which has happened. But for now, mark out your Asian session times, and when you notice price is accumulating in here, you now know what to expect in the London session and the New York session. Every time I'm taking a trade, I'm looking to get in line with the daily bias and follow the expansion of the daily time frame and the weekly time frame. So when I look at price action here on this daily time frame, I can see price has reacted inside that imbalance, and originally I was looking inside this order block right here as my point of interest area. Now you can see clearly price is just moving to the downside, and my target is this low right here because I know there's liquidity under there. Now all I'm looking to do here is get in line with the daily bias. As you can see, we're pushing to the upside at the moment. If I go to a 4-hour time frame, you can quite clearly see there's a little bit of a range going on to the downside. So again, we have this order block area right here which I'm now going to focus on, and this is all about being patient now. I'm not looking to buy into that area because that would be counter trend in my opinion. All I'm looking to do is wait for a confirmation to sell. It might not happen today, it might happen tomorrow, but whenever it happens, I will be there and I'll be ready and wait for that confirmation. Now, if price decides to expand from this area here, because we are at an area on the daily time frame where we could technically reverse, well, two things are going to happen. Either I'm not going to get a lower time frame reaction to the downside just like this, you're more
more likely to be presented with something like this where you can see prices just pushing higher. In which case, all I'm doing then is reanalyzing my price action. It might be that I look for buys in a couple of days, but until that happens, I'm waiting until price comes to my